Hello and welcome to High School Counselor Training Financial Aid Award Letters. My name is Kristen Hooper. I'm a Financial Aid Coordinator here at WCC. I've been with the college now for about 7 years and have been in the financial aid department the whole time. So I'm here to kind of talk to you a little bit today and hopefully answer some questions that you may have. And clarify a lot of confusing financial aid information. So on the agenda today, we are going to go over award letters just in general to kind of talk about what they are, what the language that is in those award letters that can be very, very confusing for both students and parents. Things like cost of attendance and direct and indirect costs. EFC, financial need, and a few others as well. Just talking a little bit, clarifying that information because there's a lot of misnomers out there. There's a lot that confuses students and parents often. We're going to talk a little bit about some misinterpretations and misconceptions that are out there, and then we'll get some practice in. We'll calculate and look at some of the cost of attendance and the financial need and doing a little bit of math, everybody's favorite part. So let's jump right in. So just on the basic end of things, what an award letter is, they are information that goes out to students, and it tells about the general cost of attending a college. Now, when these are sent are very different from one school to another. One school may send it right away once the student is accepted into the college. Another school may send that letter once the FAFSA is received. Some will wait until after the FAFSA is received and any additional documentation, or maybe their admissions app, and really everything in between. So financial aid award letters can really go out at a lot of different times. So the important thing to remember is that each college is different. If your student applied to 10 different schools, they're going to get award letters at 10 different times, sometimes months apart. So it's not uncommon. Each school's policy on when they send it is very, very different. Another little bit about award letter and just general information that you should know right up front is that award letters can and do change. They change often, actually. It really depends on a variety of factors. Probably the most common is living situation. So as students decide whether they're going to live on campus or off campus, that living situation can drastically change the award letter, because as you probably know, room and board is a big chunk of the expenses. So when students commute or they're going to school, maybe living in an apartment, they're going to change that cost of attendance. So those award letters really vary depending on a lot of factors, but living situation is a common one. Coursework, whether the student is part-time or full-time, and what the school considers full-time or part-time. Dependency status, so perhaps the student put incorrect information on the FAFSA, which can happen and does happen quite a bit actually. So if that information came back initially and said that the student was independent, that they are self-supporting, and turns out, well, that student is not so much independent, they misinterpreted the FAFSA and misunderstood the question, and now when that correction came back, the student is dependent, meaning they have to list parent information on the FAFSA. When that happens, that can change what the student qualifies for as far as financial aid goes. So other awards and scholarships sometimes is a big award, and that can change the amount of federal financial aid, perhaps state financial aid that a student is qualified for. So all of these things create a lot of confusion for students and families. So hopefully we can clarify, and just, on the counseling end, as high school counselors, if you can just relay that information to students and families that when that award letter does change, it's nothing to panic about. And if there's questions, certainly contact the financial aid office at the institution for more information. If the student or the family doesn't understand why, then contact the financial aid office, because they can explain that more and give a student a better idea of what's going on and help them understand. So to make sense of it, we have 4 simple steps to go through and just kind of talk about a little bit more in detail. So we're going to decode the offer. We're going to talk about some different language that is in those financial aid award letters. We're going to assess the data, kind of really take a deep dive into what is there and what all these different types of awards are. We're going to find the gap. So the gap is that difference of what needs to be made up. And then finally, we're going to review the facts and kind of figure out what makes sense for that particular student. So step 1, we're going to decode the offer first. So as I mentioned, there's a lot of common language that is in those financial aid award letters. Unfortunately, that common language is often only used in financial aid. So it's, it can be considered jargon. It causes confusion because students and families find it difficult to decipher these words, and sometimes synonyms are used. So in one spot, perhaps it's called the student's cost of attendance, and in another spot it may be called the student's budget, and that can vary between schools. So all of this is causing a lot of confusion. So the more that you know, and the more that you can pass on to students to know, the better we can make sense of all of this. So one good resource is NASFA. That's the National Association of Student Financial Aid Administrators. NASFA has a lot of free, pamphlets and just information that's out there for financial aid administrators as well as students and families too. They have a glossary of terms that you can Google and find that glossary of terms to print out and use with students. You can also, if you can't find it, just let our office know. I'll have our contact information at the end of the presentation here, and we can get you in touch with that information too. So one of the common, probably the most common term that you'll see used in award letters is COA, or cost of attendance. Just like in anywhere else in education, we love to use our acronyms. So COA is kind of the short term for it. So the cost of attendance is an estimated amount. So a lot of times students and families see this cost of attendance that is $30,000, $40,000, $50,000 for one school year, and they really panic and think, there's no way I can afford this. But understand that the cost of attendance is not a number to stick to. That number is an estimated cost coming from the college that gives a general idea of what to expect. Now, COA generally includes tuition fees. It often includes books and supplies. It can include transportation. It may include housing. And it's going to include some general cost for personal expenses. Now, perhaps the student is going to go into, let's say, welding. Books and supplies are not going to be as large of a cost as far as books go, but perhaps the welding equipment might be something the student needs to buy. So that kind of is offset there. So once the student has that welding equipment, they're good to go for the rest of their education. So the books and supplies may not be a big factor. Transportation, if that student is living on campus, they don't really need to be transported from one end of the campus to another. So transportation costs may be estimated at $1,000 per year, but maybe that student isn't really going to use it. So housing, that's another one we talked a little bit about, on campus versus off campus. So all of these factors go into cost of attendance, just to kind of give a general round information of what it costs to attend a particular institution. But that does not necessarily mean that that student is going to incur these costs. They could vary widely. Within cost of attendance are direct costs and indirect costs, and we're going to use these quite a bit today. So direct costs are types of fees or costs that every student is going to incur. So tuition, fees are the two for sure, and then room and board if the student is going to live on campus. So we know those direct costs are there for the student. The indirect costs are costs that may vary per student. So books and supplies, transportation, personal expenses, and other schools may include other items in that COA as well. So, maybe an institution has a large population of students who need childcare, so they include childcare in their cost of attendance, or maybe they have a large population of students that are veterans, so they include veteran benefits and that kind of thing in COA. So each school is a little bit different on what they include, but the direct costs are always going to be tuition fees and then room and board if the student is living on campus. So, and just keep in mind that the student's not going to necessarily pay every single expense that's out there and listed in the COA. All right, so moving on to another common term that you will see for in financial aid award letters is EFC, or the expected family contribution. So the EFC is calculated by when the student does their FAFSA. So as the student and family is entering in a lot of information, such as their tax information, the student's tax information, spouse tax information, they're going to enter in household information, how many individuals that the parents are supporting, and a lot of other factors kind of go in for the Department of Education to figure out this EFC. So this EFC is that number that the government is using. Now, I realize that the graph that's on the screen there can be a little bit misleading, because that median income, $51,371, is really just, it's there as just a general number. So just understand that, sometimes students are high need, so their EFC is going to be low. So as need goes up, EFC goes down because they're expected to contribute less. As students and families perhaps have more money going on in their family, they are going to be lower need, so their EFC is going to rise. Their expected family contribution is going to be larger. So the EFC is that number that's coming right from the government. So if something looks funky on EFC, it's important for the student to talk with the financial aid office, because perhaps something was entered wrong in the FAFSA. Maybe there's a lot of information, especially the first time around that they're doing the FAFSA, not knowing what to expect. Those questions can be very scary and easy to misinterpret. So if something doesn't look right, if it's saying that the student has a really large expected family contribution, and we know that that student isn't going to be able to, or the family isn't going to be able to put forth a whole lot of money, it's a good idea to touch base with the financial aid office and just make sure everything looks right on the FAFSA. So within the EFC, that's going to stay the same regardless of the college. So because it's coming from the FAFSA, that EFC is going to be the same from one school to the next. And there's two parts. So there's a parent contribution and a student contribution. So coming out of high school, some students work, some students do not. So if they are working and they earned over a certain amount, they are required to file taxes. So there may be some student contribution that is calculated into that EFC. Same with parent, whether the parent is working, perhaps there are other types of government benefits that need to be included onto the FAFSA as well. All of that is calculated in the EFC. So really important to make sure that the student and the family takes their time, does the FAFSA right, so we get this basic EFC number correct from the get-go. If you don't, that's okay. Tell them not to panic. It's fixable. So it's important to just keep an eye on it, make sure that everything looks okay. Another common term that we will come across in those financial aid award letters is financial need. So using some of these terms that we've already talked about, cost of attendance and EFC, when we take that cost of attendance and we're using the amount that the school is estimating it's going to cost to attend the college, and we subtract the EFC, so COA minus the EFC, that's going to give us the financial need. So the financial need is where we figure out, all right, how are we going to fill this hole? What is going to, are we going to have scholarships? Are there student loans? Is there a combination? How are we going to fill this need so that the student is able to attend college and do so seamlessly? All right, so hope that wasn't too confusing because we're going to move on to step 2. With step 2, we're going to now assess the data. So we're going to look at this information that's in the award letter and see what we're really looking at. We're going to start looking at the nuts and bolts a little bit. So as we assess the data, we want to look at what kind of awards are listed. Are they scholarships? Are they grants? Are they student loans? What are we looking at here? Is it free money, which is of course the best? Are they student loans, money that student is going to have to pay back? A lot of schools may include work study as well. So federal work study can be a paycheck that the student receives bi-weekly or however often that particular institution issues those paychecks. And is that calculated into the COA? There's a lot of variance there. And, just kind of thinking about if there are a lot of loans on that award letter, can that student afford to take the loans for 4 or 5 years, however long it takes them to complete their education? And then on the flip side, also earn enough money to pay those student loans back. So we're also, might be a good time just to look at and see what future occupations may be and what those occupations pay. So it's really kind of finding that balance in there. A lot of students take student loans, so it's not something to be scared of, but certainly something to be cautious about because, it is money that has to be paid back. So just be careful. And as much as you can relay this onto students and families as well, award letters are confusing and the language is not standardized across the board. So what may be listed as a parent plus L on one award letter that you can see on the left there, that doesn't look like anything too intimidating, but when you realize and you kind of do some research there and you look and you say, well, wait a minute, that's actually a loan. As you can see on the right, that award letter on the right, that lists it as a federal parent plus loan, has the interest rate, monthly payment, all that information on there. Those are really presenting the same thing to the student, both a parent plus loan. But on the flip side, that information can be misconstrued. What that award letter on the left is saying and versus what's on the right, it's very easy to misconstrue. And on top of that, to make things even more confusing, there are a lot of ways that colleges and universities refer to a federal direct unsubsidized loan. So an unsubsidized loan is the loan that pretty much all students qualify for once they complete their verification. And an unsubsidized loan is a loan that accrues interest right away. The interest doesn't wait or isn't paid otherwise. It accrues interest right away, usually at a lower rate than bank loans. But it's a loan. And you can see here on the chart that there are a lot of different ways that institutions list that unsubsidized loan. Some just listed as unsubsidized. You can see down a little bit further, they're also listing it as federal direct unsubsidized Stafford, not necessarily putting that word loan in there. Some may abbreviate loan with LN or just L. There's a lot of different ways that this loan is being represented in the award letter. So be very, very careful and explain to students to be careful too, because these loans, they do have to be paid back. So it's something to know what you're getting into and not jumping in blind. As far as loans go, there is an annual maximum amount and a lifetime maximum as well. So for, let's just say, a dependent freshman student, so a student that lists parent information on the FAFSA that makes them dependent freshmen, so they're coming in right out of college, or I'm sorry, right out of high school. As a freshman in college, they're going to qualify for $5,500 of a federal student loan. $3,500 of that can be subsidized. So when the government subsidizes those student loans, it means that they are paying the interest for the student as long as that student is enrolled at least half time. So not all students, subsidized loans are need-based, so not all students qualify for a subsidized student loan. It just really depends on that information that's put into the FAFSA. And then that amount increases as a student continues through their education, so freshman, sophomore, junior. Now, there is a lifetime maximum amount for both dependent and independent students. So the max that a independent student can get is $57,500. And a dependent student is $31,000. And that is for their entire bachelor's degree. So what's scary is that when a student accepts the maximum amount of student loans, you know, that let's say that we're looking at an independent student, right? So they are beyond 24, they're 24 or older, or perhaps, you know, they're supporting someone other than, they're supporting someone, so a child or maybe a legal dependent or someone like that. So when they're starting out freshman year, haven't taken anything, but if they're taking the maximum, so remember that last slide, we're looking at the max that they can take. So the independent student, now we're looking at $9,500, the $10,500, that column on the far right there. So when they accept the maximum amount, after year one, not so bad. Year two, again, now they're accepting $10,500, so that amount total that they've borrowed is $20,000. Now into year three, we're getting up there. We've used over half. Year four, now at that point, we've borrowed $45,000, getting towards the end of eligibility. What's scary is that as the student, you know, not a lot of students can complete their bachelor's degree in 4 years anymore. So, and especially so if they're going to go part-time. So it's really important that the student keeps an eye on how much that they're borrowing so that they don't run out, because it is easy for financial aid to run out, especially when they're accepting the maximum. Now remember that example there, that was with independent student, which was, the max was $57,500. With dependent students, that maximum is $31,000, so even less than that. So dependent students who accept the maximum amount of student loans, they're gonna run out before the end of year 5. So it's really important to keep an eye on how much a student is borrowing, but B, making sure that they're exploring other options that are out there. There are lots of scholarships and different types of aid, perhaps working while in college. All of these things will help keep the student's debt down. At the bottom, that very last bullet there, there's a website. It's www.nslds.ed.gov. And that website will give the student every student loan, kind of lay out for the student every student loan they've ever taken. We'll list the interest rate, how much interest is accrued on that loan, and they can monitor it throughout their education. So really recommend that students are aware of the website and utilize it to its fullest, because it's there for any student, and it will, you know, if they start out at Washtenaw Community College and then they complete their degree and they move on to the University of Michigan, that NSLDS is going to be there for their whole education, because this is all federal student loans that the student is taking. So as long as they're taking a federal student loan, that will be listed on the NSLDS website. So that being said, also important for students to kind of keep an eye on cost of attendance versus their tuition bill. You know, how much to borrow is a question we get often. Well, how do I know how much I'm going to need? And, you know, well, my tuition bill is only $4,000, but am I going to need a lot more than that? And how do I estimate? And it's very, very different from one student to another. So it's very difficult to estimate, you know, so that how much to borrow can really just depend. I kind of found this graphic and I thought it was interesting that the average college student could spend up to $2,000 on pizza over the course of 4 years. Over 4 years, $2,000 on pizza, that's a lot of money. You know, a lot of students are still eating ramen noodles, you know, at 13 cents a package. You know, ramen translates in Japanese right to student food. So, you know, whether a student is a frugal spender or they are spendthrift, if they're, instead of getting their ramen, they're eating fancy sushi every night, it's going to make a big difference into how much debt they're accruing, because they're using that student loan money or perhaps financial aid refund money towards these big ticket items. So it adds up very quickly. Now, just another kind of word of caution here with the cost of attendance versus the tuition bill. It's hard to estimate, and we know that. With that COA, and this is information that came right from WCC, so this is part of what our award letter looks like. It's a little snip from our award letter for this 2019-2020 school year. The cost of attendance for WCC this year is $14,727, and that's for an in-district student. So it's, again, lots of things, lots of factors that can affect the COA, but for just a standard in-district student, $14,727. Does it really cost $14,000 to go to WCC for a school year? Probably not. For a lot of students, no, it's not going to come anywhere near there. But on the high end, or really, you know, just to factor in all that information, that's the number that we're using to estimate how much a student may need. Now, if we're looking at just the tuition bill, so, and again, this is just, you can see on the right there, this is just for a semester. This particular student was a full-time student, so they were enrolled in 13 credits, so 12 is the minimum to be full-time here at WCC. So the student was 1 credit over full-time. They're in district, and the cost was $1,390. So On the large end, we've got COA at 14 grand versus the student's actual bill is about $1,400. So big difference there. So if this student, let's say perhaps they are commuting, maybe they live across the street over in the apartment complex across the street from WCC. So maybe they don't even need a car. They're just walking across the street to come to class. So we aren't looking at transportation here. Room and board, yeah, that's still something they're going to have somewhere to live, so that's something to consider. You know, would the student need to take loans? It really just depends on what those other types of aid that are in there, if that student has scholarships, that kind of thing. So, you know, all of this adds up to stress. For students, finances is just a big worry. So most students, about 70% of students, are stressed about their personal finances. They worry about having enough money to pay for college, and about half are concerned about their monthly expenses. So having a general plan and talking with the financial aid office and having a solid relationship with the financial aid office, I think, is very important to student success. All right, so now that we've decoded, we've assessed the data, now we're going to find the gap. So what do we need to fill that gap? So this is where our math will come in a little bit. So here we are trying to find the net price. So we're going to look at the sticker price, how much it costs to attend the institution. We're going to subtract that from the total amount of aid, so the financial aid that's being offered, and then we're going to look at, and that's going to give us the net price. So we're trying to figure out what's the gap. What does a student or the family need to come up with in order to fill that gap? NASFA, again, the National Association of Student Financial Aid Administrators, has a really nice award letter comparison worksheet that you can Google and find that. It's really just a kind of fill in the blank type sheet. It's very nice. We can also get that to you as well if you'd like that worksheet. Some students and families and some high school counselors help students just set up a simple spreadsheet. Kind of does the same trick. Really what's important is that there's some kind of tool that's being used to compare costs here and figure out net price. So that award letter, remember, is just going to cover 2 full-time semesters. So what those amounts are for year 1 in college, it may be very different from what it may be for year 2. So when we're finding the gap, so we're just looking at year 1 here, we need to kind of figure out how we're going to fill it. So we've found that net price, we've looked at the sticker price, we've subtracted it from the amount of aid that the student's being offered. So how do we fill it? So perhaps external scholarships, more free money. The more free scholarships you're going to help the student find, the better off they're going to be, because it keeps that debt down. Federal Parent Plus loans are an option that may or may not be listed on the award letter. We're going to look at some award letters here shortly. And those award letters may include it, may not. Most schools do offer the Parent Plus loan, but it would be something that, if it's not on the award letter, to make sure that you talk to the financial aid office and say, hey, is this something that's out there that's an option? With the Parent Plus loan, it is not the student that is responsible for paying back that loan money. It's the parent that's involved, that is required to pay that money back. So that being said, yes, it's a student loan. It is for the student, but the responsible party for repaying it is the parent. It has a little bit different interest rate than a standard student loan, but it's still very affordable, probably going to be less than those private loans, which are another option. Private loans usually come from a bank, perhaps a different type of lender. They're going to have higher interest rates in general, but they are an option for students and families if they need it. And just, again, another reminder that COA is just a guideline. It's not the end-all be-all how much money that student's going to need to take out all of these student loans. It's just a guideline. So it's important to start to budget and estimate these costs. So now that we've found the gap, we're going to review the facts and just kind of look at some other kind of side information that makes a difference. So when we're reviewing the facts, we're going to look at all of the details of each award. You want to make sure you're looking at the fine print. Some types of financial aid are renewable, some aren't. So scholarships often are awarded to college freshmen pretty heavily, and those scholarships, when they come in, they may only be awarded for freshman year. So while a student may get all of these scholarships and have most of their freshman year paid for, they aren't renewable. So come year 2, that scholarship goes away, and now how am I going to fill the gap? So it's good to consider that when making a decision of where to attend college. Some scholarships require the student to maintain a certain GPA. Is this sustainable? That's a big question mark. If the student did great in high school and has a 3.8 GPA, if they're taking chemistry and physics and all these really tough classes, is their GPA going to suffer? Are they going to lose a scholarship over it? Those are all things to consider. And then looking at loans, again, the interest rates vary from one type of loan to another, and especially from federal student loans to private loans. Those can make a big difference. So we're looking at the total dollar amount here. Remember, you want to make sure you're looking at net price, not just the amount of financial aid that the student is being offered. Because financial aid term can include a lot of student loans. So you want to make sure that you're looking at net price and really looking at the facts here of what each of these scholarships and loans, what they consist of. So that being said, yes, cost matters. And students should really consider all of these things. Are they going to have the college major that they want? Are they going to be able to study what they need to study? And do they want a large school versus a small school, and support services and all kinds of things? They're looking at, it's a more holistic approach at looking at, yes, cost matters, of course, but cost only goes so far. What is most important is how the student fits into that college atmosphere. So is this something that the student's going to be able to, is this a college the student's going to be able to complete their education at? You want them to be happy, because that's when the student is going to do the best, is when they feel accepted, when they are pursuing what they want to pursue, and are able to be academically, emotionally successful, academically successful, physically successful, all of those things put together. So when you put it all together, yes, cost is a factor, and it's a big factor, but it's not the end-all be-all. So we're kind of wrap it all up here and put it all together. When you're sitting down with a student or a family and you are comparing costs, we'll look at college A. So college A has a direct cost of $52,000. The total amount of aid is $40,000. So that net price, when you subtract the two, that's what the family would need to come up with, is $12,000. So you can see here that the direct cost of attending this institution, pretty large, $52,000 per semester. That's a lot of money. Meanwhile, college B may have a direct cost of only $15,000, so much less expensive. But you can also see they're also not offering that student a whole lot of financial aid. So that total aid there is only $5,000. The student is still going to have to come out of pocket with $10,000 when you subtract the amount of aid. And then, kind of a middle of the road direct cost at $22,000. again, the student's really only being offered $5,000 of total aid. So, you know, not a whole lot of financial aids versus the amount of direct costs that are there for the students. That student would need to come out with $17,000 out of pocket. So, you know, it's really important to do the math with the students as you're kind of looking at together with students and families and building some sort of spreadsheet, or if you're using the NASPA word letter worksheet or whatever you're using, to really put that math onto pen and paper or onto computer to really compare the numbers. So again, we're going to look at some award letters now, where we're looking at the sticker price. We're going to subtract the aid, just like we did in the example right above, or right in the last slide there. And then we're going to see what is owed. So in this case, we're just going to look at the free money. So we want to know how much they're going to have to take out with student loans or fill the gap, however they're going to fill the gap. So the first award letter here, and this is a sample award letter right from WCC. So we took a little snip. You can see here that the sticker price for coming to WCC is going to be $33,532, and you can see that just by adding up the tuition and fees and books that's circled in red there, kind of towards the bottom. And we're going to subtract that from the total amount of financial aid that the student is being offered. So in this case, the student's being offered $8,195 of financial aid. In this case, the student's coming up with a net price of a negative number. What that means is that student's likely going to get a refund without ever having to take any student loans. So they have a scholarship and they have a Pell Grant. The student is not even having to dip into any of their student loans, and they're getting a refund check just by going to class and doing what they need to do to be successful. So this is a very good situation debt-wise. The student wouldn't have any debt. That financial financial aid refund that the student would receive, they can use towards any kind of educational expenses. So if they need a laptop, if they needed you know, a car repair to get to class, that kind of thing. College 2, here we're going to look at the sticker price. So you can see that award letter looks a little different. This is from a different institution in the area. The direct cost there is for the year $22,582. We're going to subtract the total amount of aid, so $11,495 for this particular student. So they've got some scholarship, they've got some Pell Grants, some additional money there. Then an estimated net price then that the student is going to have to fill the gap with loans or other scholarships, or however they're going to try and fill that gap, is about $11,000. Another college here from the area, the sticker price to attend, we're looking at around $31,000. So with that student is being offered a large chunk of financial aid. So you can see towards the bottom, that big long red circle, all of those are different scholarships and grants that student has qualified for. Over $31,000 in grants that the student has to, or that the student is being offered. So when you do the math and you subtract them out, that student only owes $69 for the whole school year. So this is a really good example of, while the cost of attendance at COA might be larger than other institutions at 31 grand, all that financial aid the students is being offered is really, really can accumulate and cause the student to really not have to come out of pocket much at all. So this is a very ideal situation for that student, only $69. Another institution here, the COA is, or the direct cost, I'm sorry, is $31,000. This particular student is being offered about 25 grand in free money or their aid. So you can see here, this particular student had a football scholarship that accounted for $10,000, and the total amount of financial aid being offered to the student is about 25 grand. So one thing to kind of keep in mind here is that the student is being offered work study. So this might be a good time if you see that work study being included in the financial aid award for the student. Might be a good time to have that discussion. Is the student planning on utilizing work study? If so, great. There may be some more steps that they're going to have to take to activate that work study with the college. And if not, you know, they may want to let the college know so that they can get rid of that work study award for the student and get a better idea of what that financial aid is. So it's a good spot to kind of, if you see it on there, talk to the student. Is work study something they want to do? Do they want an on-campus job? Are they not interested? So sometimes some schools lump that all in together. So it's important to make sure that you know, the student sees that on there. Again, we're looking and reviewing the facts and looking at the data and then, you know, talking about it. So for this institution, the student would need to come up with about $12,000. So whether they're using loans or other types of scholarships, that kind of thing, that's all going to be something to consider. And then here in this last college that we're looking at, the sticker price here is a big question mark. You can see here, this particular institution gives you a cost of attendance, but we know that that's not necessarily an indicator of how much it's truly going to cost to go to the college. So there's no breakdown of direct or indirect costs. When that institution is giving this COA, there's no breakdown. So that is something to talk to this particular school's financial aid office about, because who knows what this COA, this $31,000 is inclusive of. So to do the math on this one, I just use the COA, and you know, I would, if it was me and I was working with a student, I would highlight it and put a little sticky note on there and say, hey, we need to do a little more investigating, but we're going to get a general idea here. So taking the COA, 31,000 minus the total aid, we're adding that up towards the bottom there with their awards and the tuition incentive program and Pell Grant, all these different types of aid, come up to about 18 grand when you estimate, when you subtract that out, an estimated net price of about $13,000 that student would need to come out of pocket for. Again, you know, this is going to be something that may be accurate, may not, because we don't really have a true idea of what those direct costs truly are. All right, so now that you're tired of doing math, I want to just kind of bring up a couple, you know, kind of side notes about financial aid and award letters. So there are always exceptions to the rule. One of our favorite things to say in financial aid when students or families ask us a question, our answer is often, it depends. So, well, can we do this? Well, it depends. And it's not meant to be vague. It's because there are a lot of rules and regulations that the Department of Education has us abide by. So there's some things that you as a counselor should know, and that if you could pass along to students as well. Financial aid offices are able to make professional judgments. So in certain situations, so if there's a special situation going on, we're able to make you know, some kind of special judgment. So for example, in this case, the student's father was laid off from his job in 2019. When he did his FAFSA for 2020, 2021, that FAFSA was based on 2018 tax information. So what this is saying is that the EFC for the student, that estimated family contribution, is inflated. So it's assuming that Johnny's father has a job and that he's working, but in fact he's not. So colleges can adjust for this. It's something that the student or the family can talk to the financial aid office and say, hey, you know, this is the situation. My dad's not working anymore. Is there anything that can be done? Each institution is going to require something a little bit different, maybe a form, maybe some W-2s, perhaps a letter of separation from the employer, but one way or another, they can adjust for this. And that process is a little bit different per institution, but it's something that the student and the family should talk to the financial aid office about. So that's one example of professional judgment and an exception that can be made. Another example that sometimes we come across is a separation of income. So the separation of income is when maybe again they did the 2020-2021 FAFSA. It's based on 2018 tax information. Things can happen in 2 years. A lot of things can happen in 2 years. So Ashley's parents were married, but then they decided to get a divorce in 2019. So now the student lives with her mom, but because the tax information reported on the FAFSA was 2 years old, that tax information is no longer accurate. So the college can adjust for this again. We can recalculate the student's financial aid using only mom's income because the student's living with mom rather than using the income of mom and dad. So it's really important that if there are these special situations that are going on, that the student and the family talk to the financial aid office, find out what the process looks like, ask lots of questions. And I know sometimes the financial aid office can seem scary. I hope that we don't, but if we do come off as kind of scary, because there is a lot of jargon that's being used, please just ask questions. We want to help students as much as we possibly can. So there are a lot of exceptions that can be made. So if they have those special situations, talk to us. Please, please, please. All right. So if you have more questions, need some more information, the WCC Financial Aid Office, we're always happy to help. Our phone number is listed there, 734-973-3523. Our email, we get back to students usually within 1 or 2 business days. We get back to students and families. So even if you just have kind of a general question, we're happy to help. I also listed my information there as well on the right. And my email address also, I'm happy to help however I can. I know that we didn't do a live session, so I can't answer questions specifically, but if you reach out to our financial aid office or myself, I'm happy to answer any lingering questions that you may have. So good luck in working with your students this year, and if you need any assistance, we are here to help. Thank you and have a great year.